Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by Delta.Exchange. What a fall in US markets. Inflation data came much worse than expected. In fact, Fed chairman has already indicated that there will be no rate cut in March. And also he said the rate cut cycle is not going to be as fast as markets are expecting. So that has actually toned down the expectation. I thought, so this inflation report, as long as it is slightly below expectation, it may not have some material impact. But as expected, 2.9, the inflation data came at 3.1, which is 2 basis point higher than what is expected. That's number one. Number two, US markets are, I can say, overbought condition. Why? Just look at since October end, November, December, January and 15 days of February. So in 3.5 months, S&P 500 has shot up more than 25% from around 4,100 to close to 5,100. So that's a fantastic rally. Nasdaq has shot up even more than that. That's because technological stocks have been doing very well. So therefore, this is the reason for them to correct. And this is a small correction. And this kind of correction has been happening many times in US market, but US markets are uniformly moving higher. So I expect this also as just a normal correction, but the headline news is very big. That's because this is the worst fall since last year March. But even then, I would say this fall is not very big. Why? I tell you. I think last Friday, S&P 500 was trading around 5,000. I thought 5,000 it should take some kind of a resistance. But what happened? The government said last month inflation data was actually lower than what was released, and that took the market S&P 500 by another 60-70 point. Only now that excess has been corrected. I think yesterday S&P 500 closed around 4970. Alright, so why we need to talk so much in detail about US markets? That is to compare US markets with Indian markets. Number one, US markets in last 3.5 months shot up 25%, but Nifty shot up only 15%. That's number one. Number two, US markets rate cut hope was the only positive news, but for Indian markets, BJP winning 3 major states as well as the rate cut hope. So 2 positive things, but still Nifty did not go as much as S&P 500. And number 3, S&P 500 just day before yesterday, it was at all-time high. But look at the Bank Nifty, we are almost 3,000 point away from all-time high, and Nifty is about 400-500 point from all-time high as of day before yesterday. So therefore, we need not correct as much as US markets are correcting. In fact, for the last few weeks, we have not been following the global cues. In the last few weeks, every time when US markets hitting fresh all-time high, but we were just struggling because of some HDFC Bank issue, Paytm issue, and many other local issues. So therefore, on a closing basis, we may not be following the US markets very closely, but GIFT Nifty indicating about 180, 190 point gap down. But that is how the markets react in panic. So once the panic subsides, things should improve. I don't think that Nifty will be closing 200 points down today. Even the US markets, as soon as this inflation data came, the markets fell, and the market opened around 8 p.m. Indian time. That second, okay, S&P 500 as well as Nasdaq made a low, but markets uh, closed much higher than that level. Say for example, Nasdaq 100 broke 17,700, 600 I think, 17,600, then closed around 17,670. Even in the last 10-15 minutes, there was a significant recovery in US markets. S&P 500 almost recovered 0.75%. I think about 35 points. So 35 points should translate into 0.75%. So that is a kind of a recovery in the last 10-15 minutes. Probably if you think that that is because of short covering, then even right now also the futures are trading at the same level. So you may remember even in 2008, Lehman Brothers collapse came, sometime in September, October, but our markets already started correcting since January. So we always preempt the global markets. So overall, this kind of a panic, traders reacting to the headline news, becoming a good news for investors. So investors can buy shares at a lower price in this kind of a panic situation. I think by the end of the day, the panic should subside. Things would have been different if US futures continued to fall, but they are not falling. So they are stabilizing. So generally when news comes, market fall, and that news has already been factored in. So what next? I think the next one for US market is to stabilize. I don't think that it is going to fall continuously. However, US markets always react to the headline news, the data driven market. So because of this bigger fall, the VIX shot up more than 13%. Right? So in India, there is no reason for such a big gap down. There is no reason for such a big gap down to sustain. So at some point of time, markets may recover. And number one, FIIs were net buyers, DAs also net buyers. So FIIs are not in the selling mode. Okay, number two, we have already corrected so much. Bank Nifty has already corrected nearly 3,000 points. So, but intraday volatility can be very huge. Even for no reason, for the last 3 weeks, we have been seeing a huge intraday swings. And especially today, the Bank Nifty expiry, so Bank Nifty can go for a haywire. So that can continue, but on a close to close basis, I'm expecting about maybe 100 point down or something like that. 100, 120 point down is something okay, but this is very, very huge gap down. So anyway, the markets are too volatile and it's difficult to handle, and intraday players, most of the time they will be losing the money. So very, very rarely they make money. But today gap down, I think intraday players will make good money. That is because when the market gap down and the VIX will spike, so the premium will spike. So they will get a good premium for trading. So today, one can try that intraday short straddle 920 at the opening, sell both call and put, and put some stop loss both the sides. So if one side stop loss hit, the other side stop loss bring it to the cost. So that should work, because usually today my expectation is that market may gap down and after that may stabilize at lower level or may recover. And because like once the news is there, that news is fully priced in at the opening, then after that, market falling more is not a probable thing. But however, in a high volatile market, nobody can say what is going to happen, especially yesterday due to the intraday recovery of 1000 point. People have become bullish. So there was a huge unwinding of call options. There's a huge writing of put option. So if those people panic, anything can happen in the market. So anyway, so this period of high volatility started in February series. I think this is likely to continue until the election is over. So this high volatile thing, we have to live with it. So let us see where market opens, and key stocks to watch as usual, HDFC Bank. And yesterday markets did not collapse in US because of Nvidia. Nvidia, though it closed negative, but it was just slightly less only. But intraday Nvidia recovered more than 3% or even 4%. But here HDFC Bank will be the weakest link, and now Reliance has taken over the market cap of HDFC Bank, so we need to focus on Reliance and HDFC Bank. And ICICI Bank ADR ended in green only, but because the Nasdaq has fallen, so sentimentally IT stocks may fall. So overall it's going to be the same thing, and huge gap down, stabilize or may recover, but it can be very, very volatile. So let us hope 21,500 support is not broken today. So as I told you, markets trading between 21,500 and 22,000 with a huge volatility. So that is likely to continue today and tomorrow also. So tomorrow is the third week of expiry for February series. Hope you enjoyed listening to this audio. Thank you for listening.